Consumer inflation for October rose, but at a slower pace. It registered a rise of 4.8% on a year-on-year basis, well within the Reserve Bank's inflation target band of 3 to 6%, giving the local currency a slight boost, albeit a temporary one.
The 4.8% headline CPI number for October was in line with expectations. It was mainly driven by food and fuel prices, given that October is a fairly low survey month. So food prices continue to increase on a monthly basis by 0.8%, only moderated from 5.4% to 5.3%, which I thought was maybe slightly higher than what we predicted.
But the good inflation news was short-lived. At its last interest rate decision speech for the year, the Reserve Bank warned that there were many inflation headwinds on the horizon. This included uncertainty around the ANC elective conference and the threat of the country's debt being downgraded.
Since the previous meeting of the Monetary Policy Committee, upside risks to the inflation outlook have increased, mainly due to higher international oil prices and a weaker rand exchange rate.
And while market players waited on S&P and Moody's decision on SA's debt, the rand fell as much as 1% against the US dollar during today's session. Many investors have already taken cautious positions ahead of the announcements.
I think many of them, in anticipation of downgrade, have been relatively light on bonds anyway. So at the right price, they probably would be accumulators of bonds. But that still, of course, would mean a lower bond price and effectively higher borrowing prices for government.
The ratings agencies tend to release their decisions after market close. So it's expected that whatever the market reaction, it will likely be clear to see on Monday. Nampumela Losiziba, SABC News, Johannesburg.